Store Capital basically focuses on businesses that are anti-Amazon, which basically means that Amazon can't take over through their online store. Businesses like restaurants and vet clinics, for example. The markets in the past few days have been crazy. With no stimulus check in sight, COVID making a comeback, and the elections being just around the corner, investors have been selling out. So what am I doing during these crazy times? I'm preparing to buy more than ever. This is what I've been saving my money for. It's times like these where real money is actually made when everybody else is running away. So in today's video, I'm gonna hit you guys with a couple of companies that I'm looking to buy or buying into right now. So as always, let's get right to it. So the very first company that I've been buying and will continue to buy into if their price goes lower is Store Capital. Now these guys are a relatively new holding of mine, but are quickly becoming one of my favorites. Everything from their CEO, Christopher Volk, to their business model and balance sheet, I really like. Store Capital basically focuses on businesses that are anti-Amazon, which basically means that Amazon can't take over through their online store. Businesses like restaurants and vet clinics, for example. Their rent collection for September was 88%. Their rent collection for October was 90%. It's pretty safe to say that these guys are solid, and hopefully they continue to operate well during these crazy times. As for my shares, I currently own about 40 of these guys, and they're paying me a dividend of about $15 every 3 months. This is definitely a company that I'm buying into and holding for the long-term play. And before I move on to the second company I'm buying, I'd really appreciate it if you guys could leave a quick like on today's video. It really helps with the YouTube algorithm promoting the channel to other people. So of course, thank you guys, and let's move on to number 2. So the second company that I'm buying into is Realty Income Corporation. Similar to Store Capital, these guys are another solid real estate company. Realty Income is a monthly paying dividend business that focuses on renting out their properties to major businesses like Home Depot, for example. They've also stayed strong during COVID, and they've actually, just like Store Capital, recently raised their dividend as well. They are, however, a bit more expensive than Store Capital at the moment. They're sitting at around roughly $60 per share as I write today's video. They are, after all, a great business in my opinion. Their rent collections have actually been quite solid too. They collected roughly 93% of rent back in September, which is not that bad if you ask me. And as of right now, I own about 22 shares of Realty Income, which pay me about $5.06 every single month. I'm still adding into these guys and will definitely keep adding if the price goes lower. So the third company that I'm adding more into is Starbucks. I'm pretty sure you guys all know who Starbucks is at this point. And if your cities are anything like mine, they're filled 24/7. People need their coffee, pandemic or not. And who's the go-to for it? Starbucks. And on top of their brand being so powerful, they're also in stores as well. They have deals with both Safeway and Target, which are both considered essential locations, so foot traffic is not a problem. Now, their total liabilities are a bit higher than their total assets, which I don't really like, but it is a risk that I'm willing to take. If I'm being honest with you guys, I really do have faith in the business, which I'm planning on holding on to for years to come. So as of right now, I have about 5 shares of Starbucks, and these guys are paying me about $2.30 every 3 months. It's also good to note that these guys actually raised their dividend not too long ago, which is pretty cool. So that's the third company that I'm planning to buy more of, Starbucks. Let's move on to number 4. So the fourth company on the list is the last one in my portfolio that doesn't yet pay me at least $1. This of course being Costco. I've been meaning to add into these guys, but their price has just been crazy high. They've actually gone down quite a bit this past week, so I've been averaging in. But if they still manage to go lower, I'll definitely be stocking up. This is a business that's second to none. I promise you guys, there's not gonna be a single time that you show up to Costco with nobody there. That just simply doesn't happen. Costco's business model is world class in my opinion. For one, these guys have some of the cheapest prices on products around. The reason they're able to do all of this is because they order everything in bulk. So it makes it hard for other businesses to even try and compete. They also happen to have their own Kirkland brand, which they happen to sell in store. They also happen to be a membership based store. You need a Costco membership to be able to shop there, which ranges everywhere from $60 to $120 a year. Now, just imagine how many people actually have that Costco membership card. These guys are a machine of a business. As for how much of Costco I currently own, I have about 1/4 of a share, which I promise you guys is gonna change soon. They also pay me a 17-cent dividend, which is honestly not very much. So of course, that's number 4 on the list, Costco. The fifth and the last one for today's video is JP Morgan Chase. This is the largest bank in the United States. They also happen to run pretty conservatively, which I like. And they're one of, if not the only bank that I personally know of that's been really focusing on technology. They just very recently released Quick Accept, which basically works like PayPal and Square. It's a service that basically allows small businesses to send and receive payments through a mobile app. Their biggest advantage being those payments are sent and received that very same day they're made with no fees, which of course, if I'm correct, is the first of its kind. These guys are definitely focused on the long-term future, which is inevitably more technology. As for shares, I currently own about 8 of JP Morgan. They're also paying me about $7.20 as of right now. But of course, if the price keeps falling, that might just change to $10 and so on. So those are a few companies that I'm currently buying into and really looking forward to buying if the prices keep going lower. Are you guys planning to buy any on my list? Be sure to let me know in the comments down below. Take care, and remember, beat the odds and do the numbers. I'll catch you guys on the next one. Peace.